Now what? That's the theme today. We had a nice bounce off of the low this year. The market broke through a major horizontal resistance level, and now the market is waiting for the next driver. Where do we go from here? That's what I'm going to address in this video. Before I do that, let's take a look at my most recent picks. UPST. That's a short that I gave you on Sunday. You can see how the stock is continuing to drift lower. It's below the 50-day moving average, and you can see that it's been weak relative to the market. So I still like this short, and I also gave you a long. QUBT. And this was a nice breakout candle, and I'd mentioned to you that what we want to see is price consolidation with half of this long green candle preserved. As long as it stays above the open of that long green candle, everything is great. It means that there's some profit taking, but buyers are stepping up and they're meeting that supply. Eventually, they'll work off that supply and the stock will continue to grind higher. So that's the price action that we expect longer term. After the initial earnings reaction, we can often expect to see this type of price compression as those gains are being digested. So I still like this long pick. I think it's going to continue to move higher. Now, that brings up another point. I gave you a long and I gave you a short because I don't know what the market is going to be doing in here. This is one of those moments when I don't have a lot of clarity. I believe that this breakout was largely mechanical. It was the China deal. Oh my God, tariffs are not going to be that big a deal. Well, we haven't seen any new trade deals come out. We just heard from Japan. They are not happy with these timelines and deadlines imposed upon them. Their economy is already in a recession, and they are afraid that if they make a rash trade deal decision, that that's going to come back and haunt them in the future. So they are going to take their time. And I think that other countries are going to do the same thing. And that means that trade deals are going to be postponed. We're already 5 weeks into that 90-day timeline. We're halfway through it, and there really haven't been any new trade deals. So the closer and closer that we get to that 90-day reprieve, the more and more pressure is going to be put on these countries. Could they be extended again? Yes, these trade deals can drag on indefinitely. And from my perspective, it's the global economic backdrop that has me most concerned, and not so much the tariffs, although the tariffs are going to accelerate all of that weakness. It's going to cause supply disruptions. You're going to see some signs of inflation. We're already hearing that from Home Depot. Home Depot said, hey, we're going to eat those added costs. We're not going to pass them on to consumers. Walmart and others, Target, have said, oh no, we're going to have to pass these added costs on to the customer. So it doesn't really matter which case happens. If the retailers eat those extra costs, it's going to hurt their profit margins and the stock is going to pull back. If they pass those costs on to the consumer, the prices are going to be higher and people won't be able to afford those goods. So they're not going to buy them. So it's 6 of this, half dozen of the other. Either way, these tariffs are going to have an impact. There are a host of other things that I can explain to you that I see deteriorating in terms of economic activity globally. They just haven't quite gotten to the US, but they're coming. So I'm not going to pass judgment on what the market's going to do. There's a budget bill that the House is going to be trying to vote on. It still will have to go through the Senate. That's a potential upside catalyst, but I believe the market feels that that deal is probably going to get done. So we'll have those tax cuts, but it'll be tough sledding. There are some Republicans who are digging in their heels on this as well. So trade deals, I think they're going to take longer to come to fruition. And the market's going to get a little anxious while it waits. So we'll see what happens. The main thing from a technical standpoint is we want to test this support level for any type of swing trades. So if it's fast and furious and we blow through it, that means, don't be getting long. You want to be watching for signs that this breakdown is legitimate, and then that will set up a swing short trading opportunity. If we come down to this and we bounce immediately, barely even touching it, that's going to tell us that buyers are still interested and that we can enter here and try and ride any upside that the market might have, knowing that our stop out point, that support level, is very close. So we don't need to rush in. We don't need to chase. Giving you a little bit more market background than normal because I'm going to be taking some time off. Anytime around major holidays is a good time for traders to get some rest. The market tends to slow down 2 days before the holiday. And then when we come back Tuesday after Memorial Day, there's what I call a holiday hangover. So now we've in essence taken 3 trading days out of the equation. And when I look ahead to see what news we have next week, there's not a lot. There's NVIDIA on 5/28. That's going to be the big news the following week. And then once we get back in June, we're going to have all the other economic data points. We're going to have official PMIs are going to be released. We're going to have the jobs report that week, ADP, ISM manufacturing, ISM services. So that'll be a very busy week. And we'll see what the market does between now and then. So I wanted to give you this final update before I leave. I'm not really going to be giving you any picks. I just wanted to give you an idea of what you should be watching for during the course of the next week and a half. And it is this pullback. So until we see that pullback, stick with day trading. I've been able to find really good opportunities on the long side. I've been able to find good opportunities on the short side. So there's good stocks both ways right now. And there's no real need to take a great deal of overnight exposure right now while all of this plays out. So I would just stick with day trading and know that the volume is going to drop off Thursday, Friday. Tuesday is going to be pretty lackluster. Then you've got NVIDIA earnings on the 28th. So hopefully that'll spark some excitement. But when I come back, I'm kind of expecting that the market will at least start coming in a little bit closer to these major moving averages, but I'm not looking for a lot of movement. Trade well. I will be doing a video on Sunday, June 1st. Watch for it. We'll see you then. Thank you so much for watching.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.